Namaskar and a warm welcome to our commodities audiocast. I am your host Ravindra Rao representing commodities Kotak Securities Commodity Research Desk. As always, we are here to dive deep into the ever evolving world of commodities trading, providing you with the latest trends and insights that can be your guiding star in the dynamic landscape. Whether it's oil, gold, copper, or any other commodity, consider us your trusted source. So let's get started. Last week, as predicted in our previous audiocast, we witnessed some notable movements in the commodities market. Silver rallied impressively, gaining around 2.2%, while NYMEX WTI crude oil reached a new high, finding support at the $88 barrel mark, as mentioned in our previous audiocast. However, it wasn't all smooth sailing. Market sentiment faced a significant challenge as the Federal Reserve, in its September policy meeting, reiterated its commitment to maintaining higher for longer interest rates. This sentiment echoed across different central banks, all hinting at the possibility of prolonged period of elevated interest rates. The FOMC statement and quarterly projections were particularly hawkish, with 12 out of 19 officials supporting another rate hike in 2023 despite keeping the target range at 5.25 to 5.5%. Meanwhile, the Bank of England opted to maintain its official bank rate at 5.25%, a decision made after closely contested vote with 5 out of 9 policymakers in favor of keeping rates steady. In Japan, the Bank of Japan decided to keep short-term interest rates at minus 0.1% and cap the 10-year Japanese government bond yield at nearly zero. BOJ governor emphasized the need for more time to confirm a positive cycle of wage increases, translating into higher consumption, even as inflation exceeded the bank's 2% target for 17 consecutive months. In the realm of precious metals, COMEX Gold faced a decline, touching a one-week low at $1933.1 per troy ounce. The catalyst behind this drop was the growing anticipation of extended periods of elevated US interest rates, pushing the US 10-year Treasury yield to its highest point in 16 years at 4.5%. Furthermore, concerns loomed over a potential US government shutdown, adding an element of uncertainty to the market. It's worth noting that holdings in SPDR Gold ETF continue to dwindle, reaching their lowest level since January 2020. In contrast, silver extended its gains and traded near $24 per troy ounce, buoyed by increased holding in iShares. On the price action front, COMEX Gold remained range bound between 60-day moving average and the 200-day moving average between 1950 and 1933 respectively. A significant break on either side on a daily closing may dictate the next price trend. Until then, we expect the price to remain in this very range. In case of silver prices have moved up. However, $24 would act as a resistance, and if it sustains above $24, then we might see prices moving further higher towards 24.60, 24.5 or 24.60, which is a trendline resistance. Even in gold, I forgot to mention, it is trading very close to falling trendline resistance, and if that is taken out, which is close to 1970, $1980, if that is taken out, we might see a sharp rally in gold prices. But until that holds, we expect the range bound movement to continue in gold. Turning our attention to WTI crude oil, it experienced its first weekly decline in 4 weeks. This dip can be attributed primarily to the prospects of further rate hikes in the US, which weighed on overall risk appetite. However, the temporary ban on gasoline and diesel exports by Russia raised concerns of a potential tightening in global oil supply, subsequently adding prices aiding prices in rebounding from their lower levels. Well, on the price front, WTI crude oil is still trading above the $90 mark, and as mentioned in the last week, it took good support near $88. But the only concern is a doji formation last week on weekly charts. So if it holds the highs near 92.43, and if it breaches $88 on a weekly closing basis, Then, in fact, on a few daily closing basis, then we might see some corrective move, which might extend till $86. So the levels to watch for in crude would be 92.445 per barrel, and on the lower side $88. I think a breach of this, either of this level will give a direction, but as seen on the chart, 93.70 would act as a good resistance. So we might anytime see a corrective move because the momentum is slightly fading and crude has been rising continuously since June 2023. There was only a 2 weeks of drop in August, but otherwise it has been continuously on the up move, and a doji formation last week indicates that the momentum is fading out and we might see a corrective dip, but levels needs to be watched for, and if crude breaches either of the levels as mentioned, we might see prices moving in that direction. Meanwhile, LME base metals face substantial pressure as the US dollar surged to a fresh 6-month high of 105.73. This surge particularly impacted copper, which also struggled due to the rising LME stocks. On a more positive note, zinc and aluminium managed to secure weekly gains ranging from 0.5% to 1%. This was partly due to signs of stabilization in Chinese property market, reflected in increased home transaction volumes in major cities of Beijing, Shenzhen, and Guangzhou. Technically, copper has breached a bearish flag pattern, suggesting possibility of further price declines in the week. On the lower side, 702 looks likely, which is a good support, and on the higher side, it should take immediate resistance near 700 and 725.26, and above that 734. So 702 looks quite likely if it sustains below last week's close of 714. On the other hand, zinc is still looking a bit positive. It is still holding on to the levels, but it has kind of made a double top near 228. So if that is taken out, we might see zinc prices moving higher towards 237. So on a positional basis, if it corrects towards 218, I think buying might emerge, and on the lower side 208 would act as a good support. Now this is from a positional perspective. In terms of US dollar, it's currently trading close to its highs from March 2023. However, hovering around 105.80. While this level may pose a resistance point, any signs of continued strength in the US economy and a sustained uptick in the US core PC inflation, which saw a year-on-year increase of 4.2% in July, could lend support to the dollar at these elevated levels also. Market focus will also be on critical economic indicators such as the US PCE price index, personal spending data, and the final estimate of Q2 US GDP. Given the recent surprises in headline CPI figures, there's a potential for an upside surprise in PCE inflation. Furthermore, keep an eye on consumer spending data, which has shown resilience till now. In July 2023, personal spending in the United States saw a significant boost, partly attributed to consumers drawing on their savings and using credit cards for financing. Whether this trend persists remains to be seen. Lastly, it's essential to keep a close watch on Chinese economic landscape. Former governor of PBOC has hinted at potential further measures to support the property sector. Recent signs of stress in the sector have emerged, with Moody's placing two of China's strongest property developers under review for a possible downgrade. Now that wraps up another enlightening episode of our Commodities Audiocast. We appreciate your company today. We look forward to bringing you more insights in the weeks to come. Until then, happy trading and stay tuned for the latest updates.